Hello everybody, this is Lara with your daily update for Bitcoin, Ethereum and XRP. Just a reminder to like, subscribe and make a comment. All of your engagement helps my little YouTube channel grow. For Bitcoin, yesterday was a very strong upward day. It didn't manage to close above resistance, just below 29,000, but the target from the head and shoulders pattern was met. Yesterday had very, very impressive volume. You have to go all the way back to May 2023 to find volume that's stronger than yesterday's upward session. So that volume spike is extremely bullish. It's unsurprising that we got a little bit of a reaction, but so far for Tuesday, there's a bullish lower wick. So let's see if this session can manage to close above resistance. It may have a little bit more work to do before it's able to close above 29,000, but if we do get a close above 29,000, look for a move up and away, maybe a back test of support before next resistance at 31,000. ADX is increasing, it's above 15, the positive DX line is above the negative, and so ADX tells us there is an upward trend. From the low of the 11th of September, we now have a series of two higher highs and two higher lows, and we've broken the previous lower high within the previous downward trend, which was 28,145.56. Now we've got another higher high yesterday, so we have the new basic definition of an upward trend, and ADX agrees. RSI is still neutral. There is a very long way to go before ADX and RSI reach extreme. Money flow is also neutral, a long way to go before this reaches as extreme as it can get for when this market has a bull run. For Ethereum and XRP, I can show you my Elliott Wave counts. I cannot show you that for Bitcoin because that is a subscription on my website. I do analyze Bitcoin using Elliott Wave in depth, very much in depth, every Monday for my subscribers at Pure Elliott Wave. Link is in the description box below. For Ethereum, looking at the entire price history, this is my wave count on the monthly chart. From here to here, I see a 5-wave impulse, 1, 2, 3, 4, 5, beautiful proportion, double zigzag for 2, triangle for 4, really nice alternation, all fits really nicely. Cycle wave 1 lasted 29 months, cycle wave 2 lasted 11 months, and is a 94% correction of cycle wave 1, an extremely deep bear market. The proportion between 1 and 2 is good. From this low to this high, there's another very good looking 5-wave impulse, 1, 2, 3, 4, 5. You'll notice that 4 is more brief than 2. It is absolutely normal behavior for a market with extreme volatility. Cryptocurrencies tend to exhibit swift, strong fifth waves, and those fifth waves can force the fourth wave that comes just before it to be more brief and shallow. So it's very normal for fourth waves of commodities and cryptocurrencies to be more brief and shallow than their counterpart second waves. From this low to this high, this 5-wave impulse cannot be labelled cycle 3 because cycle 4, this would have to be, may not move into wave 1 price territory. So we move the degree of labelling down, and this is primary 1 and 2 within cycle wave 3. Looking at the lengths of the waves within cycle wave 1 is what I'm going to use to calculate targets within cycle 3. Within cycle wave 1, primary 3 was 19.36 times the length of primary wave 1, and intermediate 3 was 18.24 times the length of intermediate wave 1. These are extremely long waves. If you're using the usual Fibonacci ratios of 1.618 and 2.618, even 4.236 for these markets isn't going to usually work. So you need to look at past behavior with a full Elliott wave count to identify how long these third waves can be and then extrapolate that into the future. Now this method is not always going to work, I know that, but the past data is all we have to go on. So let's work with what we've got. So taking those two lengths within cycle wave 1 that I just showed you, if primary wave 3 is either 18.23 or 19.36 times the length of primary wave 1, then we would have a potential range from about 91,214 to 96,571. So that's how I'm getting that potential range. I don't want to think of this as a target. I want to think of it more as like an idea of what is possible for this market. If we use an extreme Fibonacci ratio, and this is a bit more conservative, if primary 3 were to reach 11.09 times the length of primary 1, then a reasonable idea would be 54,226. So you can think of them as targets if you like, that's fine. I'm just going to think of them as ideas of where this market could go. On the daily chart, here we see the end of minor wave 2, the start of minor wave 3. It looks like minor wave 2 is over. Yesterday's strong upward session, though, wasn't able to break back into the base channel, which I've copied over from the weekly chart. Very quick look at technicals for Ethereum yesterday. It hit pretty strong resistance at 1650. It was repelled down from there. It's having a bit of a downward day. So far, support is still holding at 1550. I expect the next time it gets up to test resistance at 1650, it may well be able to break through. Yesterday I looked at the technical evidence for the low of the 12th of October being sustained for the long term, so I shan't go over that again today. If you want to look at that, look at yesterday's video. Yesterday, a very strong upward session with good push from volume. We have to go all the way back to the 12th of July to see an upward session that had stronger volume. For Ethereum, ADX is now declining. The positive DX line has yesterday crossed just above the negative DX line. So this tells us there is a potential trend change to up, but in order for ADX to indicate an upward trend, the black ADX line needs to have a positive slope. It doesn't have that yet. So with ADX telling us there's no clear trend using a model of support and resistance with stochastics, we would expect, because the stochastics reached oversold and is moving higher through neutral, that it will continue upward until it reaches overbought, and the overall price will continue upward until it reaches resistance. If price reaches resistance about the same time as stochastics reaches overbought, that may be the end of the upward swing, but only if ADX is still indicating there's no clear trend. A full Elliott Wave count for XRP sees a cycle degree first wave over here in 3 years, followed by a cycle degree second wave double zigzag over in 2 years. The proportions here are very good. Cycle wave 1 subdivides nicely as a 5-wave impulse, primary 1, 2, 3, 4, 5. For XRP, primary 3 is just 4.37 times the length of primary wave 1. And so it's not as long as a lot of other cryptocurrencies. So that's why I'm going to use 4.236 for primary 3 within cycle wave 3. And given XRP's previous price history, this is actually a reasonable expectation. So my target for primary 3 within cycle 3 is $8.10. Looking at a possible duration, if primary 3 lasts 3 years, it may end in June 2025. So primary 1 lasted a year, primary 2 just over a year. Let's expect primary 3 will be extended in terms of both price and time. So let's look for a Fibonacci 3 years. At the weekly chart level, within primary wave 3, I have intermediate waves 1 and 2 most likely over, and intermediate wave 3 underway. I'm only going to give you potential targets at primary degree. I'm not going to look at it for intermediate degree for XRP, because the intermediate degree correction I expect coming up for intermediate wave 4 may be more brief than intermediate 2, which lasted only 5 weeks. So in order to get the gain from the intermediate wave 5 within primary 3 for my own purposes, and I've invested a reasonable amount in XRP. I love the look of this chart. It's really bullish. For my own purposes, I'm not going to exit during intermediate 4. I'm going to hold on to try and get the gain of intermediate 5 to end primary 3, because it's the 5th wave, which most commonly is the longer and stronger extension compared to a 3rd wave. The 5th wave will often travel a much greater distance in a much shorter time. Here, intermediate wave 3 was 4.37 times the length of, primary 3 was 4.37 times the length of primary 1, and primary 3 lasts 4 months. Primary wave 5 was over in just 2 months, but it was 7.11 times the length of primary 3. So quite a few multiples longer than the 3rd wave and over in a much quicker time. This is your vertical upward movement where you may gain the greatest profit. So I am not going to look out for a potential target area for intermediate 3. I want to focus on my targets areas potentially for primary 3. For my own purposes, I'm not actually going to use this. It's just a ballpark figure for my own purposes. I just want to have an idea of where it might end up. I'm going to be using classic technical analysis along with a complete Elliott Wave count for primary wave 3 to try and identify when it's over. That's it from me today with your Bitcoin, Ethereum and XRP update from Dominican Republic. I hope everyone's having as good a week as I am. The surf here, it was really nice this morning. The water is the cleanest and clearest I've ever seen, and there's just so much sea life here. It's just beautiful. I'm having a lovely time.